Before we start, please don't forget to subscribe on YouTube, 5am Club TV. So we're back, and today we're going to talk about crypto, Bitcoin, and a few other things too. So a lot of people that have been commenting on, more messaging me after my crypto posts. I've talked about how do you value Bitcoin. So this is the main thing that I'm probably getting a message right now is how to value Bitcoin. And to be fair, I think trying to value Bitcoin is probably the wrong thing to do. It's more of a belief system at the moment. It's deciding whether you believe in the fiat banking system or the Bitcoin system. Because look, the only reason the fiat banking system even exists is because we accepted it and we use it. Same as gold. Why don't people believe that copper is the most valuable metal? Why not steel? There's reasons behind people's thought process and why gold was chosen, and there's a reason why the fiat banking system was chosen to be used. The thing is, we've all been sort of made to believe in it and to believe that the fiat system has value. When people decided to trade their gold for banknotes back in the day, it's because they believed that their notes that they was given had value, and they had value attached to the notes, and sort of basically that the note was worth the equivalent to the gold that they just handed over. But like Raoul Pal talks about, the network effect, the network effect took place then, and that's why everybody jumped on the bandwagon back then. So trying to value Bitcoin as you would value a stock is probably the wrong thing to do. It's like, look, how much is gold worth today? And look, don't look at the charts. What is a kilo of gold worth to you today? What would you pay for a kilo of gold? Why do you think that, same goes for, why do you think a piece of paper with £20 printed on it is worth £20? Because you've been told that it's worth, well, that's what it's worth. And as society that we've adopted that thought process. So, look, what happens when these institutions continue to buy Bitcoin using fiat debt until there's nothing left to buy? Would you believe in it then? Because look, today is the 23rd of Feb. We've had a huge correction. I've had a ton of messages asking if the bull market is over. And my answer is basically go and do some research and understand the cycle and what part of the cycle we're in. There's always a reason. And, I posted on my IG, the same people who are saying by the Tesla dip today are saying the crypto bubble has burst. Like Tesla isn't overvalued and that Tesla's not in a bubble, much like the majority of the stock market. So stop listening to everybody else. Look, don't even listen to me. You can just do your own research and choose. So look, just to give you a few pros on Bitcoin and to counter some of the negatives that people have mentioned recently, one saying it's slow to move. But look, Bitcoin is faster than a credit card. Some of these credit card payments, the day you make the payment, it actually takes days to move the money. So Bitcoin is faster than credit cards. And also to the people that favor gold, I actually like gold myself, but what I will say is that what's the cost to say move £1 million worth of gold from say Hong Kong to the UK, and what would be the process logistically, and then how much what would be the process logistically and how much would it cost to move £1 million of physical gold from Hong Kong to the UK? And then think, how much would it cost to move £1 million worth of Bitcoin from Hong Kong to the UK? And what's the process logistically? So I'll let you work that one out for yourself. We also need to look at the whole economics behind all of this. Interest rates are likely to stay low for the foreseeable future. QE is going to continue to happen. These politicians love it. I would say there's definitely probably a bit too much optimism about these vaccines. Right now they're being rolled out. People are still in lockdown. People are still getting the virus. So economic recovery is definitely going to be a bit harder. We're probably going to have some spikes because of people being let out and then they go and spend and then go back into lockdowns. So it's going to be a long, hard road for economic recovery. And inflation could be a bit of a problem for smaller economies. You never know. So the thing is, there's so many developed markets trying to attempt to weaken their currencies against others so that exports are competitive globally. But with this currency devaluation and low interest rates and potentially an increased inflation, I say potentially because I haven't made my mind up yet, and the more and more and more QE, this is just going to make Bitcoin more attractive to everyone. And, there is still sort of the bear case of this where are banks going to, they've got the money to move the market. Are they going to short this all the way down to a more attractive price for them to acquire it? Maybe. But I also think that decentralized exchanges, they got a lot of upside to go. Like Uniswap, SushiSwap, PancakeSwap. Like, to me, decentralized exchanges, their trading volume is rising. Like this space being decentralized, it's becoming more centralized and probably will become more centralized the more it gets regulated, which does need to happen. But then DEX and privacy coins, I think then they could have more of a place here. If governments are likely to ban anything, in my opinion, it's probably going to be privacy coins. But look, I'm still bullish on privacy coins long term. But then on the flip side, regulators, may not allow trading on decentralized exchanges. At the moment, the whole space is still in price discovery. So we need to watch it play out, see where the whole space is going. Look, the exchanges are one of the most important aspects of the whole ecosystem. So governments are more likely to target exchanges over individual cryptos, so especially for control. Look, Bitcoin is like a commodity. It's a scarce digital object that provides no cash flow, but it does have utility. And, 18.5 million have already been mined according to the pre-programmed schedule. Every 4 years, the number of new Bitcoins generated per 10-minute block will be cut in half. And the total number of Bitcoins in existence will move towards the 21 million limited supply. But look, like any commodity, it doesn't produce cash flow or dividends, and really is only worth what you will pay for it, or you will trade, or you're willing to trade for it. Look, it is a monetary commodity, but it is all about storing, and its utility is about transmitting value. And this is why it's compared to gold. And the way I look at this is, look, Bitcoin can be successful in the long run if the market cap does reach and sustains a very high level. The only way I see the network effect not working is if for some reason demand just flatlined and it wasn't able to reach a high enough level market cap wise. Otherwise, I can't see this becoming nothing. And I know a lot of people are talking about this at the moment. Peter Schiff and a bunch of others, they love gold and they don't want to see Bitcoin rise. And look, I totally understand it. But I understand their opinion. And the only reason I understand their opinion is because they don't understand the asset. If you didn't understand the asset, then of course you're going to think that gold's history, that's pretty much the weight gold's got in the game. And because they have a long history of being a store of value. But look, this doesn't make Bitcoin a Ponzi scheme. Just like that's like saying gold is a 5,000 year Ponzi scheme. Because the vast majority of gold's usage isn't for industry. It's for storing, displaying, and preserving wealth. It doesn't produce any cash flow, and is also only worth well, someone else will pay for it, like I've previously mentioned. Most people use it for jewelry, but if people no longer view gold as, say, an optimal store of value, then gold's network effect could also diminish. So the only thing we can really relate to a Ponzi scheme right now is the global banking system. Fiat currency is basically is an artificial commodity, if that's how you want to look at it. A dollar or a pound in itself is just an object made out of paper or represented on a digital bank ledger. Same for the euro, the yen, and all the other currencies. It pays no cash flows on its own, although institutions that hold it for you might be willing to pay you a yield, or in some cases charge you a negative yield. But when we do work or sell something to acquire dollars, we only do so with the belief that its large network effect, including a government or legal network effect, will ensure that we can take these pieces of paper and give them to someone else for something of value. Secondly, then we organize these pieces of paper and the digital representations in a fractional reserve banking system. We add another complicated layer. If about 20% of people were to try and pull their money out the bank at the same time, the banking system would collapse. Or the banks pretty much would just say no to your withdrawal because they don't have the cash. And look, this has happened to some US banks in early 2020 during the pandemic shutdown. And it does occur quite regular around the world. That's actually one of the SEC's red flags of a Ponzi scheme, is the difficulty receiving payments. So this year, I would say, was all about the institutional adoption of Bitcoin. When MicroStrategy, Square, these type of companies, and now Tesla, it does change the opinion of people. We've had Paul Tudor Jones, Stanley Druckenmiller, Bill Miller, a bunch of other investors who do have bullish views on it. And like some institutions like Fidelity were on board the Bitcoin train for years with an eye towards the institution adoption. And look, now we're seeing some of the largest asset manager in the world, like I've mentioned, BlackRock, they're showing strong interest. So Bitcoin's growth is led by the network effect and people understanding why Bitcoin exists. So I think that people who are so dead set on that one asset that they've always believed in, whether that be real estate, the financial markets, or whatever it is you've invested in, gold, try and understand this asset, even though it is digital, before you just write it off. Because there's no good you missing an opportunity because of being stubborn. Now, look, this was something I got my head around. Now, when this all fell off a cliff in 2017, I didn't even know the use or why Bitcoin existed back then. When you start looking into Bitcoin and crypto as a whole and understanding why it exists and why we're moving into this sort of tech space at the moment, why it's even coming forward, and why it's disrupting the banking system, why it's disrupting some major companies, why some corporations are using the technology, by that I mean blockchain already. Why are they adopting it if it is nothing? Now, obviously the technology side of it and company use is a bit different to why Bitcoin exists, but we do need to try and understand it before you write it off. But also, you could look into it and challenge your opinion and look at both sides and think, well, yeah, I don't think it's going to exist. I think that governments will probably ban it, or I think that the network effect isn't really going to come into place, and the fiat banking system will continue to move forward. But like I said in previous podcasts, fiat currencies have a lifespan of like 25 years, 100% failure rate. Global reserve currencies are just around 100 years, 100% failure rate. So look, it's not saying that Bitcoin isn't going to fail, because none of us know this yet. But does it have some pull right now? And will it have some pull in the future? I think so, yes. That's why I'm invested. And that's why I'm so passionate about this space, because at the moment it's still very, very early days. But yeah, so if you are a part of this market correction now that's just happened, look, don't worry too much. We've had Binance coins up over 600% in 1 month. A correction or a pullback needed to happen. These happen all the time in the crypto markets. So look, if you ain't got a good stomach for this, then just don't invest in crypto. But I'm not worried at all. Understand the cycle, and you can sleep easy at night. So that's enough from me today. I'll see you on the next episode.